Examinees. Welcome to another past paper walkthroughs. This is a question from Edexcel, iGCSE Accounting, June 2024, R Series, Modular Paper 1. The question would fall under Other Receivable and Payable topic of our accounting syllabus. Let's dive in. The question requires the examinees to prepare telephone charges account and rental income account. To make the accounts, we need the figures ready for which we shall follow some steps. In step 1, we figure out whether the account in question is expense or income. We are asked to make telephone charges account, and charge is the hint that it's an expense for Ralph, therefore it's an expense. This is the key point in the question because subsequent entries in the question depend on this. Many examinees make a common error of reversing the entries, so making it clear in the start of the question helps eliminate this silly error. Let's go to step 2, where we note down the accounting year. This purpose of knowing the accounting year is to know exactly for which months you should prepare the accounts. And knowing that helps to figure out whether there was any owing or prepayments in the beginning or end of the year. Our year end of this question is 30 April 2024, so beginning of the year is 1 May 2023. The accounting year is therefore 1st May 2023 to 30 April 2024. In step 3, we need to know the opening and closing balance. We begin with opening balance. We check what was happening in the question on 1st May 2023. There is no mention of 1st May 2023, which means there is no working or prepayments in the beginning of the year, and therefore no opening balance. Now let's try to find out the closing balance. So let's look at what happened on 30th April 2024. We can see in the question that they have paid $780 for 13 months, ending May 2024, and we also see that at the end of the year, $420 had not been paid yet. Let's account for this $420 first before dealing with $780, as the $420 is straightforward. If it's not paid, that means it belongs to the accounting year 1st May 2023 to 30 April 2024, but not paid in that year, so Ralph owes this charge. Now what do we do when we have an expense that is owed? To know the entry, we can remember some rules for step 3. If it's an expense owed, then it is an other payable and therefore credit. If it's an expense paid in advance, then it is an other receivable, so debit. The opposite is true for income. If it's income owed, then it's an other receivable and therefore debit. If it's an income received in advance, then it's an other payable and therefore credit. So by looking at the rules, expense owed is an other payable, so we credit the $420. Now come to the $780. The $780 is paid for 13 months, ending in May 2024. But our year ends in April 2024. So the money you paid for May 2024 is actually an advance. How much is the amount? $780 is for 13 months, so to find out for 1 month, you divide 780 by 13 and multiply into 1. You get 60. This 60 is the advance, not the whole 780. Look at the rules. An expense paid in advance is an other receivable, and therefore, the 60 would be debit. Step 4. Look for any payments or receipts. The question says that during the year, Ralph pays a total of $3,625. What's the double entry for this? When you pay something, bank comes down, so it's credit. Bank as the asset comes down. Therefore, expense account would be debit. We debit the telephone charges account by $3,625. Once we have these figures, we can move on to make the ledger accounts. Since we do not have the opening balance, we can start with closing balance. For telephone charges, we have 2 closing balances. On the credit side, we have $420. And we also have a debit closing balance, which is $60, which we established before. Next, we can write the $3,625 from step 4. On the debit side, as discussed earlier, with a detail.
Bank is bank. Is the opposite entry to the expenses,
After bank, write the income statement on the opposite side of bank. Bank here is on the debit side, so income statement comes on the credit side. Now, bring both the balance BD up, but on the opposite side, so 420 from credit comes on debit side as balance CD, and 60 from debit comes on credit side as balance CD. Now check, which side is complete? Debit side is complete, so we calculate the total on the debit side, and then put this veil on the credit side total's place. Use this total to calculate the difference by subtracting 60. You get 3,985 as the difference, which is the income statement. Put the dates. Income statement is the end-of-year date, April 30th, 2024. Bank is also end-of-year date, 2024, as no specific date mentioned.
Now, let's move to the next requirement, rental income account. You can read here that the rent per month up to July 2023 is $300, and it increased to $350 per month from August. You need this information later in the question. We start with step 1 to figure out if it's expense or income. Here we are making rental dot income, so it is quite self-explanatory that it is an income account. Step 2 is the same as the accounting year is the same. In step 3, we find out the opening balance first. So let's check what happens on 1st May 2023. On 1st May 2023, rent for 4 months up to July 2023 is received. So let's check. 4 months up to July 2023 includes which months? It includes April, May, June 3rd, and July. Our accounting year starts from May 2023, so May, June, July are all in the year, but why April is paid now? It is because last year, Ralph did not receive for 1 month, and while the year already ended and we moved to the next year, so last year it was the closing balance owing, which is the opening balance this year. 1 month was owing at the end of last year, so this is considered income owed in the beginning of this year. To know whether it's debit or credit, we follow the rules of step 3. As per the rules, income owing is account receivable, so it is debit. We do not have anything more happening on 1st May 2023, so that is the opening balance. The next payment is on 1 August 2023, which includes a payment for 6 months ending in January 2024. So these months are August 2024, September 2024, October 2024, November 2024, December 2024, and January 2024. All these months fall in the accounting year, so no owing and no advance. Move to the next payment on 1 February 2024, or we will get out closing balance from this date. On this date, we have received for 6 months ended 31 July 2024. That means we received for February 24, March 24, April 24, May 24, June 24, and July 24. Our year ended in April 24, so the payment received for May, June, and July are advance payments. For 3 months, rent is received in advance. From August 23, the rent is $350 per month, so for 3 months it is 3 into $350, which is $1,050. This is rent received in advance, and according to Step 3 rules, this is account payable, so credit. Step 4. Look for any payments or receipts. On these 3 dates, Ralph has received payments of variable amounts, so we need to calculate them. On 1 May 2023, we have 4 months rent of $300, so total receipts in 4 into $300, $1,200. Then on 1st August, we have rent received for 6 months, where $350 per month rent, so $350 into 6, $2,100. On February 2024, again, 6 months rent received, so it's $2,100. What's about double entry for this? When you receive something, bank goes up, so it's debit bank as the asset goes up. Therefore, income account would be credit. Now we make the rental income account. We start with opening balance of $300 on debit side. We have closing balance of $1,050 on the credit side. Then put the receipts as banks on the credit side, each of the 3 receipts separately. On the opposite side of bank, post income statement. Bank is on credit side, so income statement is on debit. Then bring the balance bad up, but on the opposite side. So $1,050 from credit comes on debit side as balance kid. Now check which side is complete. Credit side is complete, so we calculate the total on the credit side and then put this value on the debit side totals place. Use this total to calculate the difference by subtracting 300 and 1,050 from the total. You get 4,050 as the difference, which is the income statement. Put the dates. Balance bad on top is beginning of the year, May 23. We have 3 banks, so just put the dates mentioned in the question. 1,200 is April 23, 2,100 is August 23, and again, 2,100 is February 24. Income statement is the end of year date, 30 April 2024. Balance kit is end of year date, but we can avoid that if the date above is same. The balance bad at the bottom is the beginning of next year date, which is 1 May 2024, and that wraps up our solution to this Edexcel past paper question.